What a move today, huh? Unbelievable. Unbe-frigging-lievable. What an incredible move today. Really, really exciting markets. I have so much to talk to you guys about. Let's just start with the basic stuff, right? Yes, I shorted the euro all night long. I'm going to show you all my trades today. I'm going to talk to you about all the stuff that we're doing, and we'll talk obviously about the market. But I think today is just such a great day to discuss flow trading. Relax, guys. I'm not going to tell you where I entered. I'm not going to tell you where I exited because I'm going to show you all my trades in just a little bit. But everybody hold back your questions. Let's just talk a little bit about the big picture for right now, because today is like the perfect day for anybody who trades to understand, in my opinion, what short-term trading is all about, what intraday trading really is all about. And this is my own personal view, so of course you can take it with a grain of salt, but what it's not about is it's not about moving averages, it's not about Bollinger Bands, it's not about MACDs, it's not about pivot points, it's not about Fibonacci's, it's not about any other crap that everybody lays on their chart. This is the chart you guys see. This is the chart that I look at every single day. The only thing that matters on the chart is price. And in my opinion, the only thing that matters when you trade on an intraday basis is two things: news flow and price flow. And the thing about it is that you got to kind of appreciate is that one is intrinsically connected to the other. This is why I'm neither a fundamentalist nor a technician. I really believe that to be a good trader, you must be a synthesis of both. So let's talk a little bit about today about what's happened in the markets. Obviously, the big story, Italy blowing up, 70 billion dollars worth of rollover coming up in August. Third largest debt out there. The market is starting to focus on the sovereign debt of Italy. Having Berlusconi as the prime minister is hardly a vote of confidence. And now that Greece and Portugal are sort of second tier, this whole idea is becoming of European sovereign debt coming under very serious stress is creating contagion fears all across. So basically, the story is credit market driving FX market, right? I watch news really from three channels, and I'll give them to you in the order that I consider to be the most valuable. First and foremost, anybody who does not follow me, I'm just going to type this in, as Marty is doing a good job. FX Flow. Feel free, obviously, to follow me. If anybody in this room is not following me right now, you are a laggard. You are a total laggard, because I post virtually my running stream of thoughts all day long, and many of you know that that I pretty much call the market as I see it, almost on a minute by minute basis. The reason I bring up the Twitter feed is because that's really the number one source of news that I use. Now, the reason I show you my handle is, of course, I want you to follow me, but in addition to which, take a look at who I follow. Take a look at who I follow, and also, I don't know if you can see my lists. I think you can actually see my list. I have a macro FX list. If you don't tweet, you don't trade, Harley. Trust me. You don't need to tweet, but if you're not on Twitter, you might as well not trade right now. Because Twitter, in my opinion, is the single most revolutionary technology for traders that exists. So, if I'm a salesperson for Twitter, color me guilty, absolutely. Anyways, my point being is I have a list. On my Twitter feed that is the macro FX list. So if you want to find out where I get my news, that's really the best source of news. If you just copy that list from me, or if you join that list, you'll be able to see a very good running stream of commentary from news flow. So that's number one. So if I were to put this out, I would say Twitter is number one. By the way, those of you who know that spelling is not my strength. Number two is CNBC Global. And what that is basically Um, I subscribe to CNBC on the internet, so I get CNBC Asia, CNBC Europe, and CNBC US, and I watch CNBC all day long. And the point being is, you can watch it for commentary, which obviously sometimes is interesting and sometimes informal. Sometimes you can catch me on it, and I'll say a couple of intelligent things. Most of the time, usually not. But the reason why I watch CNBC actually is just for headlines. You don't appreciate the value of the headlines because CNBC is like $29, which is what like 2 euros at this point. No, I'm just kidding. It's $29. So, Partha, why am I going to tell you what am I going to tweet? I'm in the middle of a webinar. I'm not going to be tweeting for the next hour. So don't try to pry out forward information out of me. Just listen. Focus and listen to what I'm about to tell you. It's a lot more important than what I think about in the next 10 seconds, okay? Anyways, number 1, Twitter. Number 2, CNBC Global. Number 3, if you open an account with GFT, which is my broker, and obviously I'm going to pump my broker, GFT gives you access to Dow Jones Newsfeed, which is a really, really good newsfeed. In my opinion, it's sort of the best institutional newsfeed out there, right? So when you're asking me where am I getting my information flow, that's pretty much where I'm getting my information flow. I get it from those 3 sources. And it's all I really need to make, in my opinion, intelligent, incisive decisions on a daily basis. Because what you really need to do is figure out, number 1, theme of the day, and then number 2, key price points, right? So, hey, Maud, can you ban FX Pro out of this thing? Because that's a porn site the guy is talking about. Can you just bounce him out of the room, please? So, number 2 is price points. Yeah, Bloomberg is very good. Now, the problem is Bloomberg is extraordinarily expensive if you're a retail trader. What do you call it? Trying to address this towards the retail crowd. And so, in my opinion, if you spend $30 on CNBC for a month, that's a very good investment because it gives you virtually the same kind of broad news flow that you need to have. I actually find, to be honest with you, we have Bloomberg in the office. Kathy uses it all the time. I never find a single useful story. I've never been able to trade off Bloomberg in my whole life. I actually find it to be extraordinarily useless as far as, it's very good for analytics. It's very good for doing a million correlation studies. It's great if you want to look up CDS on Albania, but it's totally useless to me as far as a trade mechanism. There's plenty of other sources where you can get news that are relatively free. So news flow, very important. Price flow is, of course, very important. Why? And I kind of want to show you, today is such a perfect day for all this. This is a 5-minute chart just to show you. Let's take a look at this. The critical thing here is this, right? The news, obviously, out of Europe comes out, and the news is bad starting, from the beginning of the European session. We know that the markets are worried about Italy. But if you think about this, the worry about Italy is what? It's just absorbed, right? I mean, what we're seeing here is selling on the Italian bonds, but there is no additional news flow that's coming in. So what's really driving price to come all the way down here? And my argument to you is that what's really driving our movements today is as much a desire to break the stops at this massively important 140 level, right? There are so many people that had so many stops around this 140 level. And there were more people of the euro. Like if we go back, let's take a look. This is a very short-term chart. Let's go look at the daily chart, and we'll see. Oops. Okay. By the way, trading trick number 1: always have more than one internet connection in your house. I actually had 3 until my daughter stole one, but I have cable and DSL. But yes, I'm going to put up the chart. Bear with me. Just be chilling over there, my friend. Be chilling. All right. Be chilling. Okay, everybody sees the Eurodollar chart now? Okay, excellent. So anyways, my point being is there were, this is obviously the daily chart, and we see how this is a very magnetized point. The critical thing is you have to understand is that human beings are unbelievably irrational, right? I mean, we may be highly advanced as far as our civilization goes, but psychologically, we're no different than the Romans and the Greeks. We are very superstitious. And the superstition in financial markets is very much expressed by round numbers. In other words, we're attracted to round numbers, the way ancient Romans were attracted to entrails and shiny objects and things like that. We attach enormous amounts of vested interest to these numbers because that's typically where a lot of people leave their stops and leave, and see this as a critical point. For example, the break of the 140 level today is if it holds, if the euro ends below 140, it's going to make every frigging headline, financial press. Euro below 140, blah, 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 end of the world, markets are going to go down because people relate to these kind of numbers and people relate to round numbers very much. So it gets a tremendous amount of play. So my argument to you is that news is critical as a catalyst, but what really drives everything else after that is this kind of a desire to run prices, right? I mean, if you understand the currency market on a short-term basis, it's all about running these levels, because everybody knows that's where the stops are parked, or at least that's where they try to probe starts. And the idea is that if you can run this level and it falls, very typically you're going to have other people come in and join as they see further weakness going on. It's really a combination of understanding mob psychology and the current news flow, and hopefully being on the side of the mob. The thing about this, it's very, very heroic to fight the mob, right? It's very great to be one man against many. I am going to buy the bottom here. I am buying the absolute bottom tick. But the currency market is littered with corpses of fallen heroes. And while those stories make great mythological, novels out of Greece, and we all read them from the time we're young, that is not the way to trade, in my opinion. The way to trade is actually on the back of the crowd, on the back of the mob, rather than against it. Because yes, you will occasionally hit a bottom. Yes, you will occasionally find a top. But more likely than not, you're going to find yourself bowled over many, many, many times. Now, that's just, my own personal trading mechanism. For those of you who know my friend Jamie Setley, he's an excellent top and bottom trader. I think a lot of the stuff that I tell you is obviously very contingent on your own personality. But at least I found for myself that momentum really is the better risk than counter momentum in the currency market. And that's also very true depending on the sort of the price structure of the market. If we look at the daily chart here at the euro, what do we see? We see almost a continuous fall from 45 to 40. So if you were trading momentum in this particular stretch of time, you're killing it. You're killing it because you're in with the crowd. You're rolling over with the mob. You're like that, the mob out of Frankenstein. You're just going after the monster continuously. And that works very well. On the other hand, if you were just trying to trade over here, you really got stuck in a very kind of a nasty, ugly up and down churn. And you probably got stopped out as much as you made money. So clearly momentum is a strategy that works best in a smooth trending market. But my argument to you is that you get these kind of smooth trending segments a lot more than you don't. And our job on an intraday basis is to find those segments and hopefully trade them well. I trade them with, good risk control and obviously a commitment to the idea of trading flow. So again, just to emphasize, I always think every day you trade on an intraday basis, it's always a function of news and price, right? And very often news will come out and completely destroy the price structure, right? I mean, how many times have we seen well, let's take a look at the, news destroying price structure, which is a great example just for last, I'll go to 5 days, but we'll look at, let's look at this. This is NFPs, right? Oops, hang on a second. So non-farm payrolls on Friday, right? News destroying price structure. Here's a perfect example of where we start out, right? We start out with really already worries about Italy. First of all, this is very unusual, like the fact that NFTs has a lot of movement beforehand, but the euro just starts to tank continuously, all the way from basically the 43.50 level, right? 100 points, all the way down to 42.50. Right? Even lower to like 42.25. So, we have this big segment to the downside just based strictly on sovereign debt fears. Then we have the U.S. NFTs come out, and they really suck. I mean, they're so horrible. The market is kind of shocked. The initial reaction is negative risk, right? Just a knee-jerk reaction. But for those of you who followed me on Twitter, no. I said, no, the news as it stands right now is actually more anti-dollar than it is anti-risk because it was so shockingly bad. And basically for like about an hour and a half afterwards, if you traded the anti-dollar flow like I did, it was great because it really was all about anti-dollar. Then after that, Obama came out with a press conference. He was dour as hell. He sort of said, we don't really see any light at the end of the tunnel. And the market, the equity market began to sell off, and the euro started to sell off again because now we had, the risk-off trade come back in. And I know that this was actually an incredibly frustrating day for anybody who tried to trade, but it was still very important to understand that once you kind of understood the news flow, you then saw the price levels being run. We had the levels run from the 42 all the way through the 42.50s, and then we had it come back again down through the 43s, and then tested all the way down through the 42.50s given, and then we went all the way down to the almost down to the 42s, to the 42.25s. And then, of course, today, the story started again. So, I guess my critical point is that once you sort of figure out, you're going to get stopped out, obviously. If you were trading the big breakout here, you would have just been stopped out. But then you needed to reconfigure, and you needed to understand, okay, now the story has changed. Now I want to trade the different level. I want to target this level because that looks like it's going to be a much higher probability than the level to the upside. On a day like NFP, probably the hardest possible day to trade, and probably the smartest thing to do is to stand down. But even on a day like NFP, you can see how price and news intertwine. That news itself gets disseminated, within 1 or 2 minutes, right? But then it takes a full 2-3 hours to fully develop because it's not just news, it's news within a price context. And I hope that's clear to everybody. I hope you guys can understand what I'm talking about as far as trading intraday flows. Give me a second. I'm just going to I'm going to pull up my just bear with me. I'm going to pull up my account here, and I'll show you my trades for today, and then we can talk a little bit about the market. All right, I'll be right with you. I'm just going to deconstruct some of my trades today. And all right, sorry. Does everybody see like the euro dollar chart here? That's still visible? Okay, sorry. My biggest weakness is that I have like the worst technique technologically. All right, so just to show you a couple of charts. Yeah, it's black. That's right. It's a black background. Just to make it a little more visible. I'm going to mark a couple of things here for you guys. So this is sort of like this is like do as I say, not as I do type of trades. But a couple of things that are interesting. I mean, here was a trade. I had a trade in front of the NFTs. I actually thought it was going to be bullish. The euro ran down, and where was I? I had a trade around 42.50. My stop was at around 4,200. It nearly missed my stop. I mean, clearly just barely missed my stop. And then it ran all the way back up to 42.75. This is a classic trade I like to trade for those of you who know me. It's a trade, the 52.75 on a momentum basis. And then the other big trade that I like to do is the 35 to the 65 to the 00, which was kind of like this. This was the 4,300 trade that kind of made it. But a lot of these trades were frankly done against trend because I was just fighting the trend here, doing exactly what I told you not to do. And honestly, although a lot of these trades worked, they were not the kind of classic easy trades that I should have been doing that day. What I do want to show you are the trades that are much more classic, the kind of intraday trades that I do on a day-to-day basis. Let's start over here. So here's an example. We opened up very high, then we broke technological technique. In other words, I'm bad with technology. Is that what you're saying, George? I am bad with technology. It doesn't mean that I'm bad with Twitter. The key to Twitter is analysis, not the ability to be able to pull up Twitter page on the web page. I'm trying to understand your point. My point is I suck at hotcom. I don't necessarily suck at trading, which is I hope which you're here to listen to. All right. Anyways, open up the day today, right? Obviously, we start out very negative story on Italy, very risk averse. 42 gets given, and one of my favorite trades is that if the 00 number is busted, I want to trade that number. I want to trade it to the downside because I think there's going to be more pressure. Because a lot of times when the critical 00 number is given, there is a lot of downside pressure. So here was a good trade where we took 42 all the way down to 42.75. And here are a couple of classic trades that I like to do, which is this. This is called the meat of the trade, where we continue to have downside pressure. I sell the 50s, right? And then I did this backwards. I sold the 35s, right? This is the 41.35 targeting 4100. Then it rallied all the way back up to 50, and I actually sold the 50s to bank in both the 50 to 25 and the 35 to the 00. Now, why do I do that? I mean, you kind of look at this and you go, you're basically doubling up on a trade, right? And it's true. Because let's say if I'm completely wrong, it's an idiotic trade. I'm down about 115 points on a trade. But the reason I do this is because generally, if the flow momentum is to the downside, and especially when I have a good thematic story, I think I believe I have a reasonable chance of making the 4100, which is the ultimate target here, right? More importantly, a lot of times you may not be able to make the 4100. But you will make the 25, right? The 25 is always a much easier one. And what happens, what I'm basically looking for is to mitigate my risk. So basically, I'll make some money on the 25s. If I'm lucky and I have good flow, I'll make another 35, so I'm plus 60 in a position. But if the 35 move doesn't work out and I'm minus 65, I'm plus 25 on one, so I'm basically minus 40. I'm minimizing my losses. Oh, George, trust me when I tell you, Twitter is very easy to use, and it is definitely no more trouble than it's worth. Trust me when I tell you, it's probably the single most useful social media program there is. And believe me, if somebody who is technologically incompetent as I am can use it well, anybody can use it. It's basically, it's like texting. It's the easiest thing in the world. Anyways, my point being is that the reason why I'm coming in with both what I call the meat of the trade, where I do the 50 to 75, and the long scalp, which is where we try to do 35 all the way to the 00, is because I'm trying to mitigate the risk. So if one trade works and the other trade doesn't work, hopefully the profit of one at least minimizes my losses off the profit of the other. But when both trades work, it works really, really well. And of course, in a strong trending day like today, when you have very strong news flow, look how well the trades worked. I mean, basically, when you're looking at the amount of tip which I had today, it was plus 25, plus 25, plus 35, plus 25, and here comes the 40, okay? Now, here's the thing. I will be the first to admit that I do not stick to my own rules as much as I should. But there are occasions when you need a little bit of discretion, right? So 140 is obviously a huge magnet zone, but it's also a big zone of defense. And for those of you who were watching the trade as it was developing, literally a few minutes before we were, we came on live into the webinar, you saw that they were holding the 40 level for literally 5-10 minutes. There was a tremendous amount of bids at the 140 level before finally they gave in. So my attitude was, listen, I've already had a very good day. I am like it's offering 02. I'm not gonna let the perfect be the enemy of the good. I took the 02 to the, I covered my trade instead of letting the trade go down to the 00. But had I waited, had I simply let my setup trade itself out, it actually proved itself worthy. We blew through the 40s, as it's very likely we did. It's just that I simply at this point decided, you know what? I'm fighting over 2 pips. It's like arguing with your kids over ice cream. Sometimes it's just not worth it. You give in on the small points. And that's exactly what I did. So overall, though, when you have a highly trending day like today, it becomes very, very attractive. And, obviously today is in no way indication of how these things go. You're going to have days where it's just going to be all red dots, where you're just going to have stop outs. But on highly trending days, you're looking here. Let's take a look at today. Plus 25, plus 25, plus 35, plus 25, plus 35. So that was like 120 plus 25, 145 pips of very smooth price action that combined the flow of the news flow of the market with the continuous market response of the price flow. And, one of the things another thing that I kind of wanted to stress here is that I always want to trade with the momentum, right? So, for example, I didn't enter the 4150s until the 4150 was broken. I didn't enter the 4135 until the 4135 was broken. I may have thought that 4100 was, so what do triangles and circles mean? Okay. For those of you who don't know, Oanda, this is basically entries, and these are exits. If it's an exit that's a limit order, you're going to get a positive limit order. You're going to get a green circle. If you're a stop, it will be a red circle. And if it's a manual exit, like this was a manual exit, it's just a green triangle. But all of these exits were actually limit exits. I limited out myself at the prices at the prices that I set. So this was 4125. This was 4100. This was 4025, and this should have been 4000, and I exited myself manually. So, if you guys want to see stop losses, let me show you stop losses. I don't want to show you where are my stops? Look at this. I can't believe I don't have any stops on this particular chart. Okay, let's go back. I will show you plenty of stops. Hold on. Okay, here's a stop. See this? This little red triangle, that's a stop, right? If you look, there's probably a couple of stops. A couple of them. Here's another stop that's hidden behind this blue thing. Here's another. I believe there's a couple more stops here. So, believe me, you get the stops. This was just simply a very good week for me. So I get to brag. But there are plenty of times when I come out here and the chart looks like it's a St. Valentine's Day massacre with a whole bunch of red circles on it. Okay, Harley asks a great question. Do I set my daily bias first, or do I trade within a lower time frame? The time frames really don't matter. I mean, I look at the 5-minute chart just because it's a small chart. You can look at the hourly chart. As a matter of fact, a lot of these trades take a long time. It's an hourly chart. They take as long as several hours to develop. The only thing I look for on the chart is the price flow. Are the prices, are the key price levels taken or given? And that's what I try to trade those price levels. But obviously I don't trade those price levels in a vacuum. What I do is I look at those price levels within the news flow. I want to find out what's the headline of the day, what's driving things up or down, and this is the second critical thing. And that's what really kind of takes a little bit of, I think, analysis and perhaps a little bit of experience, is to figure out, is the headline of the day newsworthy? In other words, is it strong enough to really motivate a lot more people to think the same way? Because what you're trying to do is figure out if the story has resonance, if the story is going to have perpetuity. You're trying to trade some continuation. It's ultimately what I do on a day-to-day basis is nothing more than a continuation trade, right? So in order to have continuation, you have to have belief that the news flow is meaningful enough to have continuation through the moves. Yes, and obviously I'm looking for breakout of ranges. I'm looking for some sort of meaningful news flow and meaningful price confirmation of that news flow. In other words, if the news is great, but the price doesn't do anything, I don't do anything. As a matter of fact, one of the very good rules that actually one guy that I was in a webinar said it said the following. He said, if the news is great, but the price goes down, what you want to do generally is trust the price. And conversely, if the news is bad, but the price goes up, you kind of want to trust the price. Because what that's saying to you generally is that there is another story. There is something else that you're not seeing that is actually motivating the market with a greater force than this news that you're aware of. And it's like a hidden hand in poker. You kind of want to trust that more than the news flow. So, although I know everybody thinks I'm a pure fundamental trader, and I pay very, very deep attention to the news because I think it's critical, by no means am I married to the news. Harley asks another really good question. Basically, the most trending sessions that you will see always happen between 4 a.m. to 12 noon New York time. That's really the start of the European session and all the way to the lunchtime of the New York session. That's usually the most, and if you really, really want to trade the most powerful sessions, and this is not my opinion. I actually did the research on this. If you look at the hourly candles that have the greatest amount of movement, that is the single widest range, it is between 8, 9, 10, and 11 o'clock New York time. So if you want to trade the greatest potential breakouts, that's when they happen. The rest of the time, you can kind of sit down and do nothing. After that, the secondary most active trades are 4 to 5 European time. Basically, it sort of goes like this. The beginning of Europe, 4 to 5, has a lot of activity. Then the market kind of gets a little quiet between 6 and 7. And then North America comes online. 7 starts to have some activity. And then North American data comes out. And between like 9 and 11, when equity markets are open, when European markets are open, when everybody's around and really willing to trade, that's when all the stuff really happens. So George is asking, when the news is good and the price trend is tanking, how do I fight the urge to go with the news? Here's what I do, George. So let's say the news is good, but the price goes down, right? I do not touch the chart. I do not touch the price until the price has shown me that it's willing to go up. So, let me give you a good example. You can't see this very well on here, but you can sort of see it a little bit over here. You see, this was a doji, right? I mean, basically the prices went all the way down and they started to go back up. When they started to go back up, I was a buyer of the prices, right? And I only bought on the way back up, in terms of when prices started to go up. I want to show you. Unfortunately, I've forgotten a lot of these trades, but generally. Here's another good. I don't know if the news was good or bad here, but notice how I did not sell until price actually went all the way down, and I sold it all the way down, with a flow. I did not try to fight the move. Oh, here's a good example. So I don't know if the news turned itself around, but I think the price turned itself around, and once the price turned itself around, I actually completely changed my bias, and it went all the way up with the price. I guess. Yes, I base all my trades off of the 00 and the 50 setup. That's what I look for. On an intraday basis, the penny differential is the really big risk. It's the really big levels. It's very funny. I posted today, if you look at my Twitter feed, I was like, look guys, the critical, as a matter of fact, let's take a look at my Twitter feed, okay? Cause this will give you a good idea of what I'm talking about. All right. Tell me if you guys are seeing the Twitter feed here, right? Are you guys seeing that? Okay. All right. So let's go to my tweets because I think it's kind of really interesting to sort of analyze my thinking today. Okay. So Euro takes out, this was done obviously 4 hours ago. Euro takes out the 41 handle in early North American traders, I noted earlier, and if you followed me earlier there. And I say 40-50 next, and the next big salami is the 40-100, right? But what I find really fascinating is like, somebody says to me, somebody in the, sorry, let me go to, somebody in the mentions, right, says, big test will be 40-70, held since May. I'm like, dude, let me tell you, 40-70 goes, 40-50 is, I didn't say this to myself, but I was thinking to myself when this guy wrote it, that if 40-70 goes, 40-50 is going to go like a knife through butter. And it's exactly what happened. This is why sort of, the fib long-term numbers, all that stuff pales in comparison, in my opinion, towards the 50 and the 100 levels. Because as 40-50 goes, and then I said the next big salami is the 140-100, and now the 40-50 goes over here, right? And obviously a huge target, as all headlines will scream if it's broken, so maybe it's going to get sticky here as long as let's make a stand. And it does stay sticky for about 2 hours. We just refuse to break the 40-100. And then I say finally we get into very close and the 40-100 in view, and then within an hour goes 40-100 goes as noted, right? So just by following my thought pattern and kind of following where I'm thinking where things are going, you can get some very good ideas for trades. You can get some really interesting trades. But I will not leave by finally making one last pitch. Those of you who want to know the exact trades that I'm making on a day-to-day basis need to sign up for BK Forex Advisors. Advisors.com. And sign up for our signal service, because aside from this Twitter feed that I have, which is a public Twitter feed, I have a private Twitter feed that we just started working on in a beta format that actually calls out direct signal calls every single day. Needless to say, we had a very good day today. We banked a ton of tips today. Past performance, it costs $199 a month, and you can try it for a month. In other words, you can do it just for a month if you want to. And you're going to get a tremendous amount of stuff. You're not going to get just just my signals on a daily basis. You're going to get all of our BK trades where we've had a positive record for the last 3 years running. And you're going to get the Kathy's calendar calls. I'm actually not an impulsive trader. No, I have been able to really work within a very intelligent infrastructure and a framework that has been consistently positive for me. That's my whole point. I am a reactive trader. I listen to news flow. I suspend my biases all the time. Those of you who follow me on Twitter know I will change my opinion in a heartbeat if the news changes, right? I mean, the greatest line ever was when John Maynard Keynes, who said, "When the facts change, I change my opinion. What do you do, sir?" And I think it's a line to live by for when we're all trading, especially on an intraday basis. We have to be very mercenary. But no, I do not trade impulsively. I actually trade within a very structured framework, as you guys can see. I don't enter trades until they come into certain targets. So anyways, those of you who want to try us out at BK Forex Advisors, feel free, because we have a tremendous amount of ideas that are going on there. Those of you who just want to follow me on the free Twitter trade, I'm always there. And you, of course, can always ask me questions. I'll be happy to answer them. So that pretty much concludes our monthly session. I hope you guys really enjoyed it. If we have any final questions, I'll be willing to. We got about 5 minutes. We can take some questions if you guys like it. Look at the charts. I couldn't care less about the time frame. I'm just simply looking at charts. The reason I'm using 5 minutes is simply because it's just it's a small enough time frame for me to see lots of price action. But what I'm looking for is levels. I'm looking for levels. I don't trade time. Remember, you don't get paid for time. You get paid for price, right? The only thing that we get paid for is price, right? So it doesn't matter if my trade takes 5 minutes or 15 hours. I get paid all the same. So price is what matters. Time is just a part of the time-space continuum. Yes, I don't care about support resistance levels. Yes. And sometimes that gets me into trouble. I'll be honest with you. Yes, sometimes certain, sort of ungainly support resistance levels really do matter. But generally, I believe that on a day-to-day basis, what really dominates trade is the runs of the OOs. And that's what I trade. Yes. By the way, look at how the euro really bounced. Once we ran the 40 level, it really bounced up as all the short covering came in. Yeah, I'm very much looking at the price action of 50-pip block. That's exactly right, Jose. That's exactly right. Right. And I do not use any indicators, no. I do not use any indicators, no. Again, we don't get paid for indicators, we get paid for time, we get paid for price. So my view is that news and price are the only two things that matter. Not quite. If you guys, our checker, if you really want to take a look at what I really do, I suggest you guys go to hold on a second, let me just pull this up for you. Hang on, I'm going to give you my YouTube channel. This is where you guys want to go if you want to learn about the setups and their rules. This is where all the setups are, and you get a good idea of all the rules. All right. Anyways, guys, I hope you guys enjoyed this. I got to run because very busy day here in New York. Hopefully, I'll be with you next month. Yes, it does. Yes, it does. Quite a lot, Jose. Feel free to message me. As I said, anybody who doesn't follow me on Twitter really doesn't understand what the hell is going on during the day. So I encourage everybody to come in on Twitter. And, of course, those of you who really want hardcore trade ideas, bkforexadvisor.com. Come join us. We'll be happy to put you into the private room and trade with you on a daily basis. All right? And that was my last column. And, of course, I write a column for FX Street every single week. So thanks very much, guys. Wishing you guys the best of luck and the best of trading. I hope the flow is with you. And I'll see you next time.